Great. All right. My recording feature works. Sometimes it works, sometimes it doesn't, so I have to restart my laptop. This is an old laptop. And, anyways, good morning, good afternoon. Today is Wednesday, May 6th, 2026. And I'm here to share my analysis with you guys. Let's get straight into it. What is going on? I'm writing this at 6:49 Eastern Time on May 6, 2026, and the markets are up close to 1%. Trump is backing down from escorting ships through the Strait of Hormuz. Terry, a host on My Funded Futures, says something that resonated with me. Markets will always find a way to inflict pain on the majority of people. What I'm trying to say or ask is whether we are reaching over exuberant levels. What I'm trying to ask is whether we are reaching over exuberant levels. So far, we have thrown everything at these markets and they continue to show resilience. Are people starting to believe that markets will just keep rising at this pace? It is during times like these that people get blindsided. I say this because my analysis has given me a bearish signal at the open, targeting 65 ticks at 0930 Eastern Time. The bulls are indeed very powerful. Recently, any bearish trade I take struggles and requires extra time to reach take profit. But could there possibly be a shift today? 99% of people would say not to short the market at all-time highs. By now, most people, if not all, are either caught in FOMO for missing this rally. I believe we have been up for 5 consecutive weeks. The market being up so much during the pre-market is already affecting my confidence. But the most important thing is this. If my trade does not work out today, if my stop loss is hit, I will step away from the markets for the day. I will not jump back in and compound losses. Remember, we went over my progress on April, and I had heavy losses. First week $500, second week $700. That was me getting back in the markets. So, if this market continues to push up, if my analysis is wrong, then, take the stop loss, step away from the market, and go over and try to find a solution of what happened, what went wrong. But just generally speaking, yeah, I do feel that we are in a type of environment now where people, including myself, feel that markets are just going to continue to push, are going to continue to drive higher no matter what. We've thrown the geopolitical issues involving Iran at the market. It hasn't budged. We have thrown Jerome Powell at it, being extremely hawkish. I wouldn't say extremely hawkish, but sounding pretty hawkish, saying that he's going to stay on the board, that he's not going to step down given the legal actions, and how and how that the actions that the administration has taken against him is could affect the credibility of the Fed pretty much. The new Fed chairman that's stepping in is looking at cutting rates. So you have like all these things going on, inflation, whatever, high oil prices. We've tried to throw everything at it, and the market is making all-time highs. Some economists or analysts will probably say that this market at this pace can go to 8,000. Within a few weeks can go to 8,000. We don't know why. You do hear a lot of people like, I don't understand. But if you're managing a portfolio, if you're trying to get return and you're dabbling in to what they call it, into foreign equities, I can't think of the term right now. If you're dabbling into foreign equities, if you're trying to hedge your bets by going into bonds or whatever the case may be, and you've missed out on this run, and you're seeing that the S&P is just continue to climb higher and higher and higher, you may start to say, well, I really don't know what's going on, but I can't afford to miss this. I can't afford to miss this. Now, maybe coming from an institutional standpoint, maybe that could only just push the market even higher. But I do feel like I may be contradicting myself, because at the same time I do feel like people have been like, I probably having money on the sidelines or trying to hedge their bets, buying gold, buying whatever. And we saw how the gold trade has been playing out, retracing from its all-time highs. We thought that maybe we step into gold given the geopolitical issues. Right now, equities. Now we're hearing about the chip trade. Now we're hearing about, what did I recently hear? Apple's considering the chips from Intel and Samsung. Samsung was up like 8% yesterday. Intel is up. Now it's the chip trade. Now it's the productivity from AI. So this market can potentially continue to grind higher and higher throughout the year. But this also reminds me of, when was this, guys? During the AMC, Bitcoin, GameStop saga. When was that? When the markets were just grinding higher, and then it started catching everybody's attention. Everybody was an expert in the markets all of a sudden. Even I went from a long-term perspective, investing philosophy, investing, buying shares, dollar cost averaging, to thinking that maybe I can dabble in options. Maybe I can start day trading. Are we getting to that point? Possibly. Maybe not exactly the same, but similar, because it's just going up. And so maybe people are going to start stepping in the market and saying, hey, I want a piece of this. And we may find ourselves getting into this rally on the tail end. All this stuff is currently being priced in. The chips, AI, all of it is being priced in. It's been a generous return. Going from 67 to now, 73, above 7,300, possibly 75, who knows? Like I said, 8,000. I'm sure that there's an analyst out there on fucking Bloomberg or CNBC saying, I see the market's going to 8,000. The over exuberant level, the over exuberance. But those who are also trying to short, including myself, because we may, one, I just follow my analysis, but somebody looking from the outside in, giving all the things that are going on. But what is that saying? The markets can remain irrational longer than we can remain solvent, something like that. And I think like I said, every time when I do my analysis, and then if I get a short lately for the past 5 weeks, all of April, it was struggling. Struggling to tap it. I was just like, damn, taking longer to execute. The market was just grinding higher, where it got me to a point where I was just like, anytime I had had a signal to sell, I was a little bit nervous, because I was just like, I don't know, man, this market, it just doesn't want to go down. So are we at that point, where we're just like, fuck it, excuse my language, forget it, we're just gonna buy. We're just gonna buy. I wouldn't think that you would be stupid. I would think that you're making a great decision. If the market is going up and is hitting all-time highs, why short? Why? And now you have a collective thinking of this type of stuff, where everybody's probably just rearranging their portfolios and saying, I'm going long. You have people, when people start talking about their long-term portfolios. I was listening to a gentleman named Leo on My Funded Futures. He's saying, "Oh, my long-term port." They always got these nicknames. My long-term port is doing really well. I'm up 100% in my, what was he in? What was he in? His Google? I think he had some Google shares. He's up over 100. I forgot exactly. Amazon, one of those. Once you start getting that, once you start getting more and more people, talking about their long-term portfolios, like things just seem to be going up, this exuberance. And by the time you want to dip your toe in, things start changing. We've been at the point where you could have blindfolded yourself and threw a dart at the S&P, and more than likely you would have been up. I'm just saying, that's just my opinion. I could be absolutely wrong. I'm just speaking from my observation. I'm not an economist, analyst, or anything. I'm just speaking from my participation, from my own discretionary way of trading. That it just seems like I could have just said buy for the past 5 weeks, and most likely I would have been up so far. Are we at that point? So I don't know what to say. I'm gonna follow my analysis. You know, it could struggle to get there. It could take a long time to get there. It could just sweep me out. But I do plan 0930 to go for first trade is going to be just for negative 16 ticks. And then if that executes, it's going for negative 49 ticks. And then I'm done. I pray that it works out. But when I go on the computer and I'm seeing that the market is already up 1%, I really get nervous. I say, oh, hell no. What's going on here? Volatility's in here for sure. Sorry about my kids in the background. I had to take my significant other to the airport today, to Malaga International Airport, because she's going to an event. I forgot what you call those. An event, pretty much a Pilates event, and they have it every 2 years. The cost of admission is $700, and it was sold out. My significant other decided to already had put in her application to volunteer, so she doesn't have to pay for the admission, and she just has to cover her flight and her stay. And so as she's very intelligent, and so she was able to be accepted onto the volunteer list. And so this morning, early this morning, the kids and the kids didn't go to school today. We drove all the way down from Granada to Malaga Airport, and turned around and came back. So I'm definitely a little bit tired because I was trying to do this last night, but I usually give myself maybe an hour or two after the market closed. So if the market closed in Spain, Spanish time, around 10 at night, then I typically, if I want to do my work before, the night before, I'll start at 12. Make sure all the prices are in, and then I start to do my analysis. But my significant other was telling me to go to sleep because you gotta drive us an hour and a half tomorrow, and you need to get some rest. So woke up, cold shower, got her there on time, had some breakfast with the kids, came back, and yeah, I was able to complete my analysis and also make this little quick video. So sorry. And then yesterday, got distracted There was somebody was, I would say, referred to me in a way because they were interested in moving to Granada next year for a year, and wanted to know, ask me some questions about Granada as an American living in Granada, because she's an American from California, like where I'm from, and just had wanted questions to ask me, and then later we met up to take tapas and stuff like that. So I was distracted, didn't get a chance to pick up my kids from school. They only live 5 minutes away, and luckily my significant other was working from home. So I was late for the first time in a long time picking up the kids because I was with this damn lady, getting distracted. Um, didn't trade. I mean, actually, I didn't do my analysis. I shouldn't have traded, but once I came back home and it was about couple minutes before the market was getting ready to open at 9:30, you know, I was I was like, maybe I could do a little momentum trade. And so I waited a few minutes after the bell. I was like, I'm not going to do that because, as you know, I've been telling myself, don't do momentum trading. If the markets is doing something pre-market, just stick to your schedule. Specifically how I train my brain to trade at a specific time and just have rigid, strict rules that I must follow. But I jumped into the market like I always do. I quickly regretted it, and I was like, "Let me get the hell out of here, get out of this fucking market, and just don't do it, Shante." Because I was headed in that direction for a minute, and I was just like, "Nah, if I can get out of this trade, if I can get the hell up out of here, I'm gonna do it." And according to my analysis, there was a lot of data that was present yesterday, and when I see that, I say to myself, a lot of data is getting filtered through my rules, my script, my code, and that can also mean for me volatility. There's just too much data coming through. It's just that's a sign of volatility for me. Possible there could be a possible day of volatility, and when I watched the first couple minutes, like I saw it was wicking, it was going down, going. I can't exactly recall, but it wasn't easy. And then I thought I found like it was like just kind of rising, just headed higher, and I was like, I'll try. But then I was like, nah, this is not good. I'm trading from an emotional standpoint. I shouldn't be doing this. But anyways, glad to be back at my desk doing my analysis, adhering to my rules, and yeah, I did my analysis. It looked clean, you know, and I was just like, all right. But like I said, it doesn't help my confidence when I see that the market is up, 98%. You know, Trump backs down, saying that I'm not going to, escort the ships through the Strait of Hormuz, meaning that the United States is probably not going to do anything at all. And if you're not going to do anything at all, it's not going to escalate the situation. Therefore, maybe the markets take, or see that as positive, as a good thing. Because the moment you start pushing the ships through there and drones and stuff start flying, warning shots start flying, then of course the situation has escalated. But right now he backed off. He said, "Nah." But when you think about it on a broader point of view, which day trading is very short term, but when you think about it from a broader perspective, maybe from an institutional level, so what the hell are we doing? Maybe we have to reevaluate and price in this going on much longer than anticipated. Screw 6 weeks. They literally we may be at this for a while. So maybe institutions will probably, get off this hope bandwagon and probably realize that I really don't know what the hell is going on. Because the only thing that moves the bars that we see, the candlesticks, are institutions. Somebody told me that. I think it was Terry from Trade and Travel. She's like, those people who move in those candlesticks are large institutions. You know, right now we've been on hope. We've been pricing in AI, the productivity gains, the earnings, etc. You know, we're talking about Anthropic, having an IPO, possibly, an IPO of $1 trillion. We can't discount that. Like, it is increasing productivity. But in the broader sense of things, what are institutions thinking? You know, and how are they going to position themselves? And already they've been eating off this amazing rise. If you've been in 6,700 when the S&P was 6,700 not that long ago, and it's at 73, shit. Maybe you could just be like, let's lock in our gains and wait it out. Anyways, we'll see how things pan out. I'll keep you guys updated. Let's go to my, like I said yesterday, I jumped in emotionally. And once I got into profit, once I broke into, I got out. I said, you know what? No. I say to myself, my first trade, that was my first and second trade. My first trade and my second are my best trades. Sometimes, have you ever hit your stop loss? You get back in, and then maybe you're in the right direction. You're able to make up your losses and break even. But the amount of time it took to recover those losses, it took all day. You had to hang in that market and monitor your trade all the way, for hours, hoping that it wouldn't retrace too much. If your stop loss, you're dragging your stop loss higher or lower or whatever to lock. It just always seemed that no matter if I recovered from my losses, it just took so much energy and time that if my first trade had worked out, it was quick, it was fast. I even made made good money, and you know, and if for some reason I hit a stop loss and I wanted to recover that, it just, even though I probably had recovered 30 points or something, 20 points, it just took so long to do it. As I say, your first trade is going to be your best trade. First trade is your best trade. Anyways, I'm gonna leave it at that. That's it. I don't think I got any more in here. No, that's it. All right. So have a great day. Hope that you guys have a great trading day. I look forward to speaking with you guys soon. Bye bye.